And we're back with Forum Daily's market update. Compliments of Catherine Murray, host of the Buck Stops Here. Take it away, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we are seeing markets start out the day today on a lower note, following a lower close on Wednesday. Certainly, there's a number of moving pieces that investors are having to consider. Let's start with the U.S. Federal Reserve. A number of investors are, in fact, anticipating that they will pause in June. That's following a number of softer PMI and economic data. Having said that, not only in the United States, but globally. Having said that, though, China actually did show PMI data with an expansionary move today. So that's obviously a positive. But that does follow weaker economic data in general out of China, which certainly has been one of the contributors weighing on the price of oil, WTI, which actually closed out May down by 11%. It looks to be trading a little bit lower today as well. Investors also believe that there could be a pause in the Fed's move in June, given the fact that we are still waiting and wondering what 500 basis points of tightening over the past year is doing to the broader economy and lending. Adding to that, of course, would be SVB, the Silicon Valley Bank bailout, and the impact that that is having on lending and tightening standards in the United States. So those are the key reasons why investors believe that the U.S. Federal Reserve might pause. Despite that, though, the Fed has been quite clear that they want to continue their tightening bias, just given concerns about the higher and stickier inflation. And of course, they would look at the labor market as to why they continue to believe that they need to be in this tightening bias. Keep in mind what we're going to be watching for tomorrow is the U.S. non-farm payroll report. Expectations are for 190,000 jobs created and 3.5% on the unemployment front. That's a tick higher from April, which is 3.4%, and a 235,000 gain in terms of jobs created. So a little bit lower in terms of job creation. We'll see what comes out tomorrow morning. Away from that, and I suppose in conjunction with that, as it relates to a tighter labor market, it is a positive, and that does leave some investors to believe that we will have a soft landing. But of course, there's so many investors out there who have been believing and waiting for a significant recession to take place. Importantly as well, perhaps Deutsche Bank is warning of an imminent wave of corporate debt defaults. So again, something else to be watchful for. From a headline perspective in the United States, of course, all eyes have been on the debt ceiling debate. The House, of course, did pass the debt ceiling legislation bill. It now moves to the Senate, and they only have a few days up until June the 5th for that debt ceiling date, or deadline, I should say. As it relates to the TSX, we are trading lower following a lower close on Wednesday. Energy and communications, the key areas of weakness. Again, we've seen the price of WTI really have a difficult month over the past month, down by about 11% or so. That, of course, weighs on the energy sector, the energy stocks. But nonetheless, there is the view that that it is demand driven, and that we will see demand increase, and that there's a key shortage of supply. That's been a conversation we've been having for a couple of years now, that the market has taken seriously, and that's why you've seen some nice moves higher in WTI and also some key energy stocks and sectors. Nonetheless, as we look at the TSX, down by about 4.4% for May, and is up by 1% only on a year-to-date basis. Those U.S. markets are up by about 10% or so. That would be the S&P 500. Nasdaq up much stronger. Important data point here in Canada this week, the GDP did come in better than expected, 0.8 or 3.1% on an annualized basis, beating expectations of 2.5%. At the same time, why is that happening? Well, perhaps the consumer is stronger, but take a look at this information. TransUnion data shows that the Canadians are taking on more debt, in fact, at an all-time high, $2.3 trillion in the first quarter alone. But importantly as well, as we look at what we're seeing from a GDP perspective, what will that mean for the Bank of Canada? Are they recognizing all the debt that it's being placed on people's balance sheet by their own decisions, I suppose? And will they raise rates or not? The market is expecting a 40% chance that that they will hike in June, and 100% that we will see higher rates by the September time period. So we'll see how the BOC reads the GDP data and also reads the amount of debt on consumers' balance sheets. Away from that, just two stocks to watch. TFI International, UBS upgraded that stock, setting it up by about 3%. And Laurentian Bank came in with better than expected earnings, helping that stock to move higher today. Nima, I'll leave it there. Back to you.